Scott Bauer. He's the CEO of the Prosper Trading Academy, standing by. Scott, always a pleasure. Thanks for taking the time to come on the show this morning. Housing data, building permits, your initial thoughts. It seemed like, well, kind of mixed data there.
Kind of mixed, but I think it's actually pretty good, given the environment here. And it'll be real interesting to see how a stock like Home Depot, which got slammed this morning, reported lower revenues, lower guidance, how that may react on a number like this. Because overall, this is a pretty positive number for housing starts and building permits.
It is. Scott, let's talk a little bit about energies. We've got inventories today. There's a lot of focus on U.S.-China trade talks as a catalyst for price activity. What do you have your eye on right now in terms of what's behind the driving force behind crude prices right now?
Well, we've got the API report out in a couple hours, and we've started to see some builds come out again. Oil had rallied nicely, kind of got thrown off its rally late last week. EIA came out, said there was that U.S. shale production was going to pick up, more production going into 2020. And, it's going to be real interesting. Volatility is picking up, Ben, ahead of the OPEC meeting in the next 2 weeks. And if you look at the option complex for crude, volatility skew on the put side is really elevating. So there's a lot of traders, a lot of investors out there expecting a downside move in crude, especially leading up to that OPEC meeting.
Scott, it seems like crude is yet to share the optimism that the indices have seen the last month or so. I'm actually looking at the bonds here right now, and I'm wondering if some of this has to do with, again, lower rates. In theory, with lower rates, you would think that that might spark some concern amongst crude traders, some demand concerns, some uncertainties, because if we have a Fed, if we have central bank dovishness that has to spark an economy by lowering rates, I mean, in theory, that just kind of echoes and speaks to some of the demand concerns that many traders have.
Yeah, there's no doubt about it. I mean, every time we get one of these rallies, at least over the last 4 or 5 months or so, it's been met head on. So there's a lot of headwinds in the crude space here. The range has held, right? We always talk about that trading range. 52 to 59 or so has really held. Little bearishness in there right now, and I wouldn't be surprised over the next couple days, especially if we see nothing coming out of U.S.-China with that first phase agreement here, if we see sub 55 in crude in the next couple days.
Something to keep an eye on, Scott. If we do see crude start to decay, do you think we would see the indices start to take notice? Because we were just talking about how crude has really kind of brushed off some of the rally we've seen in the indices. I mean, but indices tend to focus on crude, and that could spark some concerns. We were just talking a minute ago, J.B. McKenzie. He was like, hey, I don't really see what could derail some of this bid activity. I wonder if it would be a decline in crude prices, because we know that the markets tend to keep an eye on each other.
They absolutely do, but I tend to agree with JB as well. Right now, we're in this almost a Goldilocks scenario for the overall equity market, and also, Ben, there are so much money on the sidelines waiting for a pullback that hasn't happened yet. We may start to see some of these fund managers really just say, all right, I've got to get in, I've got to play this catch-up going into the end of the year.
Scott, you mentioned the inventories today on the close. That's the API. Obviously, the EIA more closely watched tomorrow. But let's talk a little bit about some of the dollar activity, because we continue to see a very strong U.S. dollar. And, I mean, one could argue that that's been creating a little bit of a headwind for crude, and potentially a reason why we haven't seen crude enjoying some of the optimism that we've seen associated with the indices and the rally into the new all-time highs. I mean, possibly the dollar's the culprit.
I would absolutely agree with that. I mean, you look at that relationship, and historically it's been, stronger dollar. It has been, weighing on commodities, weighing on crude, and that's no different right now. The dollar, albeit, having fallen off a little bit over the last couple of weeks, has really solidified, has really held in there.
Yeah,
so
sure has.
It certainly is showing signs of strength.
All right, we'll continue to watch, Scott. Inventory levels, the dollar, rates, and the indices, as it's all tied very closely together in terms of crude. And with all the mixed messages, Scott, you can see why crude's been very much range-bound, as you mentioned. But hopefully that'll break out at some point, and it'll be interesting to see if we get kind of a ripple effect type reaction from some of the other markets. Traders, that's Scott Bauer joining us. He's the CEO of Prosper Trading Academy.